I had to the point I need to chat with these people and see what this community is about because I don't like to consider myself much of a freeloader, but I feel like I've been freeloading on a lot of great insights over the past 6 months, and I owe it to join the group.
Well, welcome. How long have you been in the group now?
12 hours,
12 hours?
12, 18 hours. Yeah,
Okay.
I just joined last night. Actually, I was watching the NBA playoffs. Yeah, and I signed up then.
Okay. So it says you're multifamily. You have properties now?
Yes, sir. Yeah, so
Okay.
I'm still on the brokerage side. And we get to the point, right, where we're grateful enough where we can, instead of representing so many people, buy primary or investment properties that we can get some for ourselves, right?
Yep.
And I'm a big believer of that. I'm multi-generational. My father came to this amazing country, and he started in '88. So I kind of followed in his footsteps in a way after college. But anyway, I totally believe in what you folks are talking about ditching the W-2. Although I haven't been a W-2 guy since 2013, um,
Yeah.
I would love to not have to cold call property owners on behalf of my clients and be able to have my own portfolio to work with. So
Yeah. We start
separate
over every
this.
day in real estate and
Yeah,
sales. Yeah.
yeah. So that's kind of like in a nutshell who I am. What about you, Hunter?
So Hunter's tied up
Greg.
right now. Yeah, I'm Craig. So
Sorry.
I've been a broker, real estate agent for 30 years. So I've never been able to hold a real job. So getting away from the W-2, I don't quite understand that dilemma. It's just every day you get up and you got to figure out how to put food on the table kind of thing.
There you go.
Um, and you talked about it too, is we go out there and we find deals and we give them to our clients. Well, you got to kind of take a few of these and keep them for yourself because you get all the best ones that pass right through your fingers. Grab a few of them. You got to have a future.
And I've had Craig similar to you. I'm sure because you've been in the game longer than me, twice as long as I have. You've encountered people where they come up to you like, "Would you like to partner with me? I like how you work and all this stuff." And I'm literally in my head, I'm like, "I can't afford that. I don't have the money to do
Yeah.
something like that."
We
Yeah,
don't get 6% of every transaction, despite what you think.
yeah, right. Our operating expenses and mouths to feed, and you get a little
Yeah.
risk averse, right? Because as we are, with the market conditions, and you're just like, well. I know, but with this money, I'm guaranteed to pay my mortgage for a year, right?
Yeah.
So yeah, so I'm just really grateful to be a part of this community with like-minded individuals.
Awesome. Well, welcome. How you doing, Hunter?
Doing good, doing good. Sorry for hopping on a few minutes late, guys, but
That's all right.
happy to be here. So
Hey Hunter, hey, it's nice to be connected with you, man. Thank you so much for sending me those spreadsheets.
absolutely. So the larger, more complicated file, that one comes from Lone Star Capital. I don't know if you've heard of them. If you haven't, you should look them up. They got kind of a cool story. Uh,
Okay.
and then the other one is from I think his channel is called Invest with Ace. He's a guy out of California that started a wholesaling operation, and he's probably late 20s, early 30s at this point. But he's been buying 2 to 25 units all across the Midwest. And the smaller spreadsheet is his. So anyway, good tools and resources there.
Yeah, I appreciate that. And for me, I'm always looking for ways that, look, I felt like I knew so much, and I'm saying it in past tense because this is before I started listening to the podcast, where I would think of myself as somebody who's been doing this for a living for many years. That, oh, I know more than them, like investors, especially W-2 people. I'm just being completely honest with you. This is what I do day to day in my life. So, of course, I'm going to know 10 times more than they would. But after listening to this podcast and just hearing these folks that left their jobs and all these smart decisions they've made, and I'm like, I had some humble pie, and I started thinking like, wow, I should learn from these people because even though I can, underwrite all these things and I have the spreadsheets and all the, experience, like there's people that are doing it boots on the ground that I can totally learn from. And yeah, that's what brought me to you guys.
Yeah, it's a different world, a different mindset change to going from being a realtor to being an investor, right? Because we're you're just go 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 go, and you never stop to look at that portfolio and step back and build, even though we have the best benefits, right? Because it comes off the depreciation comes off our direct income,
Yeah.
you
Yeah.
know. But our brokers don't teach us that. They just want us out there selling so they get more commissions.
That's right, man. You're absolutely right, Craig. It's like we're always in that rat race, right? And we're just going and going and going. And seldomly do we think about ourselves, right? Because we are attached to that hustle. And man, wouldn't it be great, Hunter and Craig, to not have to worry about prospecting or open houses and things of that nature, right? Just living on our own.
Yeah. So Hunter set up this little group as kind of the hybrid agent. Is that what you call this? Hybrid, or is it
Yeah, hybrid unicorn agent. I mean,
unicorn? That's the word. Okay.
it can kind
So
of
a
go.
unicorn agent.
Yeah, but really, it's kind of here to help, people who are trying to figure out how they build a real estate sales business of some sort, and how to also buy properties and merge the two. But quite frankly, we get more often than not people who are just investors who are, trying to figure out how to work with agents or things like that. So
Oh,
can range a little bit, but it's always good to have other, agents and brokers on here as well, just to be able to talk shop and, figure out how we can grow and improve our businesses.
yeah, especially when we're in different markets. Like I love that. It's masterminding. I'm currently in coaching right now on the commercial side of things. I'm with the Massimo group. So we have two different calls a week, right? And I'm constantly trying to improve, whether it's people working in different asset classes or even different markets. Like, hey, what's working in yours? And I can always use you folks as like a case study for my clients and vice versa.
Mhm.
So, do you have anything in particular you want to discuss? Because we kind of do different formats. We usually do open format if someone's got something going, or we can kind of jump into the news and kind of see your perspective on different news that's going on in real estate.
Yeah, if it's possible. And sorry, fellas, I'm actually driving for a show in at 1:30, but I wanted to hop on for my first time and see how the calls are going and see
Okay.
how I can contribute.
Okay. So nothing on the top of your list that you want to discuss then.
No, nothing really.
Okay.
No.
How about you, Angela? Did we lose her?
Hi there.
Hi.
Hi. I was just curious about this call. I haven't joined one in a while. I think last one was really interesting.
Okay.
And I think agents are so crucial. I'm just really interested to hear the agent perspective in this market that we're in.
Okay. Well, feel free to chime in. I think we'll just kind of cover some of the news topics and kind of get your opinion on it. So you want to begin, Hunter? Where should we start? Should we start with the widespread softening?
Yep, no, that's a great place to start. So I think for the most part, a lot of our news sources, Craig, come from X or Twitter.
Yes.
Just because I feel like it's a great place to get direct access to um, some different people who are in the industry who are very knowledgeable. Data brokers, other agents and investors. But
Yeah.
um,
Well, most sources will post on X, so it's kind of a good way to catch them all in one spot. So the first one comes from Resi Club. Lance Lambert posted this today. Widespread softening. Almost every major housing market has seen softer pricing action than last spring. So 49 of the 50 largest metro housing markets have a weaker year-over-year home price shift than a year ago. So we kind of jump in, and the ones that are down the most, like Austin, Tampa, San Antonio, Phoenix, Dallas, Jacksonville, Orlando. So it's kind of that sunshine belt, which everyone knows about, right? It's kind of where everyone during COVID went down, and they were the boom markets. And then Minneapolis, St. Paul, that's where I'm at. That's up 1.3%. That's kind of the break point where prices start to increase. And then San Jose, Santa Clara, California is up 5.5%. Cleveland, Ohio is up 5.3. So that Northeast is starting to grow.
mhm.
So it seems to me like during COVID, everyone moved down to the Sunshine Belt. Then they were called back to work and everyone's moving back. That's kind of what it feels like. Do you have
Yeah,
a sense of what's going on out there?
Yeah, and this hyper supply. I just got back from Texas. I'm based in San Jose,
Okay.
California, and guys, it's just it's crazy because I hear like for example in Austin, like they're welcoming around 130 residents per day. according to what the broker told me, but they're just in this hyper growth mode, right? And as we all know, like it takes a few years for that supply to get absorbed, right, from permitting to completion. And there's just so much supply out there, which is like I think Zuber called it a crash, right? Because they dropped like 22%.
Mhm.
If you would have bought in July 2022
That
compared to
doesn't,
now, it's
I don't
dropped
know
like
where he
over
got
20.
that stat because that's not what Resi Club is saying. So I did hear him say that, but I'm not sure I have the context of what that 22% is. Because Resi Club is only showing like 4.6% year over year.
I think that so I think my numbers, I think what I'm looking at and the mistake I'm making is I'm looking from 2022, like a 3 year figure versus year over year.
That could be. Yep.
Yeah,
So you think it's just they overbuilt and the sales transactions is the demand is still there. It's not all of a sudden the demand disappeared. You think the demand will fill in the extra supply that they overbuilt?
I personally believe that it's the demand is not where it was during the pandemic housing boom, of 2020 to
Hmm.
2022, but folks are still trickling out over there. I just helped another client sell his property here in San Jose and relocate out to Austin for a job with Google. He's got based out over there. It's definitely like flattened compared to then, but it's I think it's a mixture of that and the supply. I'm curious to get everyone else's take.
What is the job market there? If there's jobs there and they continue to keep hiring, then the demand is going to continue on.
Yeah, so specifically for Austin, right, we all know we're focusing on tech a lot more. So I see that a lot more in my market, right? Going from this tech hotspot to that tech hotspot for a few different factors. But right, Houston, where I was just at, right, it's going to be a lot more like energy, the ports. But I just feel like so many folks have relocated to that area over the past 5 years that a lot of that supply got absorbed, but they just, with low regulations, they was like build, baby, build, and there's just a whole lot of supply for renters to choose from or buyers.
Okay. So NAHB, NAR, they'll predict demand for housing based off of jobs. So they'll say it's 1.5 jobs per housing unit. So they range like 1 to 2. So NAR, National Association of Realtors, will figure for every 2 jobs created, they're going to need a building permit. So that's how they figure if you got enough houses coming to the market. So what I saw different, and I think we're living in different times, is during COVID and this new technology, you could work from home. So then we had all this phantom demand. It was real demand, right? People were moving down there, but their jobs were still based in the Northeast and the Midwest. But they
Mhm.
were able to leave these high tax states, leave California, and go into these other markets, work from home, and then take advantage of, the sunshine and the lower taxes. Well, now my theory, and I don't have proof on this, is now that a lot of these people are being called back to work, that demand is drying up. But you bring up a good point that Austin has a tech base. They do have real jobs there, and it's not all work from home. So my question is how many of the local jobs are there? We multiply it by the 1.5 per unit, and then we can figure out how much is real demand.
Yeah, that is an interesting way of looking at it too. Yeah.
You got any thoughts on that, Hunter?
yeah. I I think I'm kind of with you to an extent, Craig. I mean, I think that there has been so much of pent up, you know, supply. Particularly, I'm more thinking of it from a multifamily mindset. So in my market, for example, there was, so many new construction apartment complexes. And so I think, there was so much of that that's been coming from 2019. You're still being able to draw, a potential demand or potential buyer for some of that, housing. You're drawing that away from particularly probably entry level, most likely. And so I've had a number of those conversations, and so I think yes, it's partly maybe jobs, and partly some of those jobs are saying, hey, you either got to come back to the office, move back, or you have to find a new job. And I've heard of those stories, but I do think as well there's other asset classes that are kind of pulling the potential buyer for some of these housing units away from being able to actually buy or wanting to buy.
Yeah, so we could have two of those both be true or three things going on at the same time. So I do believe that a lot of apartments through syndications hit the pipeline and they're just coming into the market. Right, but there's nothing behind that. So, that's back to what Nima was saying is you got a glut coming to the market, and then it's just going to take a few years for that supply to be chewed off. My theory is the supply isn't as strong as they thought, that it's going to last longer than they think. But I don't have proof on it. It's a theory.
Yeah, explain a little more. I just want to make sure I'm understanding your theory.
Okay, so back to the formula, and we're just going to use 1.5 is what any sort of city is going to project on what they need for housing units. For every job created, or every 1.5 jobs created, they need a housing unit, whether that's an apartment, a house, whatever. So that's the housing units they need, and then depending on the job, depends on what kind of housing unit they need. That's how cities kind of project their growth and what they have to build infrastructure for. So that's kind of the rule of thumb. So we had something different during COVID. We didn't have job growth in those markets as much as we had people able to leave their jobs in other states and then go to a place they would rather hang out in Florida on the beach and work from home. So they bought properties down there, which increased the demand. That was real demand, but it wasn't based off of local jobs because they could work from home. Now, as the years kind of pass by, a lot of these companies are calling those people back to the office where they have to be at the office 3 or 4 days a week now. So they can't live like they used to. And a lot of that vacation rental isn't working out for them too. So then they have to move back or they have to sell that property down there. So the demand's not as strong as what all the builders projected, right? We had cheap money, bunch of syndications jumped in, builders jumped in, everybody raced to fill that demand. And I think we overbuilt because it wasn't based on jobs.
Greg, do they mention like in particular Southwest Florida? And I know Lance is always harping about this, right, with the whole weather situation and just the math not mathing, right? And so many people, I believe, correct me if I'm wrong, I think, was it like Citizens First or something is like their insurance provider, right? And it's like the insurance provider of
They
last
pulled
resort.
out. Yeah. Oh, yeah. The state provided. Yes. And then
Yeah.
they're bankrupt.
Yes. Yeah. So it's like, well, I don't recall that hurricane that ripped through Southwest Florida, but they're like, yeah, well, I mean, I can't get insurance or self-insurance, or they just the math doesn't math for them to rebuild. And like Punta Gordo, I think Punta Gordo, like that's always just I feel like in the news about how bad they're doing as far as trading of properties.
Yeah, I know a lot of them are damaged, and then you can't get insurance on them. I know some realtors in that market that have been kind of struggling. They've also got a kind of a weird situation compared to our state. They've got numerous MLSs that don't really cooperate with each other. But let's see, the Tampa, St. Petersburg, Clearwater, that side, that west side, that's down 4.5%. And then that's at Austin, Round Rock, Georgetown, Texas. So I think that whole region was part of that hurricane. And that's where most of the insurance is, got the issues with.
Thank you for sharing that. I love these types of conversations. It's like get you spinning the wheels.
Mm-hmm. Yeah, everything's based off of jobs. You need the income, right? We don't count the homeless shelters, the tents as housing units, right? If you don't have a job, you're going to be living in under a bridge or something. So
Yeah.
1 in 4 potential buyers waiting for rates to fall below 3%. Are you seeing that with your clients?
I hope not, because they're going to be waiting for a long freaking time. I might as well never call them back.
How about you, Hunter?
Yeah. it's probably not 25%. It's maybe somewhere between 15 and 20% if I just had to take a, poll out of all the conversations I've had with clients or potential clients over the last 6 months. But there certainly are people who are kind of holding out on the sidelines. One of my friends ended up selling and buying, and he was one of the few that kind of made the jump. So he is what Zuber would call the move up buyer. He's got a 3-2 house, and he's going to a 4-2 or a 4-3, and he was going from a 3% mortgage to a 6.5 or 7%. So for him,
It's a big jump.
the only reason he made the jump is because they've got 3 kids and they needed a 4th bedroom. So they needed the extra space, and they found a house in a fantastic neighborhood for them. So that's really the only reason that they made a move. But financially, I don't know that the numbers would necessarily make sense for him or really for anybody. It's really just, hey, I'm going to make a conscious decision that I'm going to sacrifice current and future dollars in the form of a mortgage payment for a better neighborhood, better school district, whatever it may be.
Yeah. How about you, Nima?
Yeah, to piggyback on what Hunter said, I mean, I am that avatar, right? We wonder what's going to make you move, right? What do they say? Death, divorce, or diapers?
Yeah, they've got it's death, divorce, departure, like job relo, and then others have diapers, diplomas. Everyone adds what that third or fourth D is, but yeah,
Yeah, and for
life
us,
happens and forces you to move.
and that's I born and raised in the Bay Area. Like I went to like college out here, but my in-laws live around 2.5 hours away, outside of Sacramento, and we're going to be relocating there at the end of the month because my wife has grew up there, and although she's lived here in my area for about 9 years, she's always wanted to move back. And the way just things are getting more and more expensive, and the schools aren't that great where we live, like that was our motivating factor. From what I've seen with my clients, like I personally believe we all know, all three of us on this call know how hyper local real estate is. In my market, I think when it gets to around 5.5%, that's when people really start pulling the trigger and transacting. But I had to take a rate up 6.65%, right? Because of the whole diapers concept.
Is that what your local rates are?
Right,
6.6?
right now, what we just picked up, yeah. So I'm grateful enough where the current house that we have, I have a 275 rate on it, right? So I still have positive leverage. I can rent it out for a few $100s more than what I have to pay in PITI on a monthly basis. So I'm grateful that it'll cash flow, so I'm not as concerned. However, I got a 10-1 arm on that thing, right? So come 2031, I'm most likely going to be, looking into doing a 1031 into one of those Sunbelt market states, with some decent job growth. So yeah, kind of, you help the clients, and all of a sudden you got to do it for yourself.
So
Well,
that leads me to a thought I hadn't thought about, but are we going to see more kind of the accidental landlords? They're sitting at these 2 or 3% mortgages. Whatever the 3Ds force them into moving, and then they're going to hang on to that cheap debt because it's going to cash flow. So is there opportunity for realtors to manage that property for them?
In my market right now, a lot of folks, maybe probably similar to yours, they're not really moving as much right now. I think that where I reside, like in that Silicon Valley area, the accidental landlords, the bulk majority of them will be in 2020 to 2024. I'm including 23 and 24 in there, mainly 24 because of the AI boom that we had out here. And as I'm chatting with you guys, I'm literally passing the headquarters of NVIDIA, right? So just in December, I had a client that bought a house all cash at 3.65 mil from his NVIDIA shares, and then when a lot of their portfolios drop by like 30%, they just, with the rates being as high as they are, a lot of them are pulling back right now because this area is all just tech heavy. They liquidate their reserve stock units, and that's what they use for the down payment.
Interesting.
yeah, I think in my market it's a little bit different. um, we still have a decent amount of demand and not a ton of supply. It's gotten better. I'd have to pull up the stats to see exact numbers for you guys, but it's gotten better comparatively to last year. But there's just not a ton of people who want to be accidental or on purpose landlords with their primary residence. I know of one, friends of mine are actually selling the house that they had as a rental for the last 2 years. Unfortunately, they didn't list with me, but that's okay. We're still friends. But
Something they never told you about before you got licensed, right?
yeah, exactly. But they're doing a kitchen renovation on their current house, and they needed funds, to do that. So they decided to sell a rental property, that they had as a primary residence, not pay any capital gains tax on, whatever they're going to net on it. So for them, it was very much a good move. But there's a lot of people who have um, cheap enough rates on their homes, and they still don't want to be a landlord, particularly because the rent rates have not really risen in the Greenville upstate South Carolina market as much as they probably could have since 22. There was a very quick run up from 20 to mid 21 going into 22, and then
Mhm.
it's kind of plateaued since then. I mean, you might get a little bit of a bump, but for example, I've got a client's house under contract. His mortgage payment is 1,800 a month, and he's got a 1,200 square foot house. And for him, he would barely break even renting it out. And he's got, I don't know, it's a decent amount of equity. It's five, almost six figures for an equity check. So for him, it's like if he's going to move, why is he going to rent out a place and maybe make $100? It's just tough.
You talked about your market earlier. There's a glut of apartments coming to the market. And then after that, there's probably very limited. The permits aren't being applied for. So you're going to have a shortage of housing. We talked about your region last week, and you got a lot of job growth.
Yep.
So do you see rents going up in the next few years?
They're forecasted to go up, and I
Yeah.
would probably agree with the thought process and the data that's behind it. The upstate as a whole has tons of job growth, and it's not slowing down. I mean, we're adding more things left and right. Like uh, in Greenville City, downtown, there's I don't know how many 5 or 6 thousand square foot lot that's there, but they're going to build a 25 story high rise right there that's starting construction in a couple months. So there's
Okay.
there's tons of big commercial developments that are going on, as well as lots of jobs and manufacturing still coming into the area. The problem that we had from and I'm going to talk multifamily for a second, but we had such a big influx of dollars coming in 2018, 2019, 2020, and then all of a sudden financing went kind of crazy for everybody, but some people were already in the process, so they're obviously not going to stop building a 300 unit apartment complex just because the market's a little shaky. They've got to finish out that construction loan. So we had a ton of stuff come to the market last, you know, 4 years. It's kind of stopped this last year. There's only two apartment complexes that I'm aware of that got built in the last year. Um, Everything else was something that was already in progress. In fact, I've actually got some land for a client listed that's going to be an apartment complex one day, and we've gotten little to no traffic on it. So, developers aren't interested because, going back to what I said earlier, there was such a demand from people relocating to our area during 21 and 20, and there's job growth as well. That it caused rents to really spike. Going from let's say 750, 800 for a two-bed apartment to 13, 1400. So a very big jump. And maybe my numbers are a little off. But now you can't really get more than 13, 1400 for a two-bed unless you're in like a class A multifamily, like in very prime location. So anyway, long-winded answer, but hopefully that answers it correct.
Yeah, and that's pretty typical, right? It's everyone, the market can take apartment buildings. Everyone starts working on finding the land, coming up with the plans, getting approvals, and then they all race to hit the ground first and be first in the ground, and then the last one built out and rented loses.
Yeah.
So we just had a long run of apartment building that I've never seen in my career before, right? We haven't had this since the 70s and or 80s. And then, I don't know how long it's going to take to come back, but the market has to be just right to make sense to build out and rent. And right now it doesn't make sense. So at once this inventory gets chewed up, like you said, rents will rise. And that's what you were alluding to also in
Yeah.
what
Yeah.
Austin. Forget the city
Yeah.
already.
Right. Hey, gents, I'm so sorry to interrupt. I'm really happy that I was able to connect with the both of you.
Yeah, jump on next week. So every
Same.
Yeah.
week.
Be here.
So it's always great to chat with folks, like I said, from different markets. I just got that text that my client's in the lobby, so I'm gonna go show them this office space real quick.
All right. Good luck.
Thank you so much. Have a productive week, you three.
You too. Take
Take it
care.
easy. Bye.
All right. Bye. Okay, so then next topic, average 30-year fixed rate mortgage nationwide, 6.92%. So after the tariff deal, the 10-year treasury went up and rates jumped a little bit. We were at 6.5 locally. I don't know what we went to yesterday. It's probably 6.6, somewhere in there.
Yeah, we're a little higher than that. I think we were at 6.7 before, so we might be a little closer to 6.9.
Okay.
But yeah, I'm
And
not
I don't know why the regional differences, but there are. So,
yeah, I don't really know.
yeah.
I'm not really surprised that it did go up a little bit. I mean, it just seems there's still a touch of uncertainty with some of the stuff that, Trump is doing.
Mhm.
Obviously that doesn't directly affect it, but I think there's some consumer sentiment, there's some, banking sentiment, other nation sentiment, how they trade
Just
our
a few unknowns in the market. Yeah, I get it.
how they trade our bonds does happen to affect our housing market. And I think it was Zuber, maybe somebody else put out that video on how a nation could cripple our housing market. How like China or the UK or France or whoever holds these bonds. Japan, I think so.
Okay. So that leads us right into the next topic. Another post by Lance Lambert. National Association of Home Builders reported approximately 7% of all goods used in new residential construction originate from a foreign nation. Okay. So let's just grab the calculator here and we're going to just pretend we understand what this says. So my immediate response was 7% of all the products or 7% of the cost because it didn't say. Lance did reply back to me yesterday and say it's 7% of the cost. So, what's your median house price? It's like 450 or something.
So it's closer to 350, 360.
Okay, and what's a lot worth there? 150, 200?
No, it depends. Like if you're in a subdivision, let's say the lot's worth 60.
Not cheap. Wow.
Well, it's not really, but that's just kind of what the builder would sell it at.
Okay, let's just say 400 is the house price, 100 is the lot, and 300 is the construction. That's 400,000 is the median price.
We'll just do easy numbers.
Yeah, so 300,000 is the construction price, 7% of that cost, and it's probably less than that, right? We're gonna probably take out 20% of that. So let's go 300,000 times 80. Because say 10% of that's going to be builder margin, another 10% will be holding costs. So you have construction costs probably right around 240. This is, fantasy land. We're just making up numbers. If you're a builder, don't freak out because those aren't your numbers. So 240 times 7% of that is coming. So $16,800 is coming from a foreign market. Okay. Let's
Yeah,
say it's 100% tariff, right? There's no margin on there either, right? So that's the actual retail price. So let's just say 60% of that price is the actual cost to bring into the country. So that's 10,800. So at 100% tariff, that adds 10,800 to the house of a $400,000 house, right? 2%, 2.5% increase.
yeah. it's certainly fascinating. I mean, I don't know that I would peg 7% as the number. It feels like there would be more goods imported. I'm thinking particularly lumber, because I know a lot of that comes from Canada.
Lumber's not expensive. The big bill in housing is going to be the plumbing, electrical, and like the HVAC, the cement, the roof, or the windows are a huge bill.
Right,
But the
right.
actual lumber bill's not that big.
Yeah, so that's why I'm thinking, that 7% could be just the lumber cost, but I don't know where they get the rest of the goods from. Uh,
Yeah, so you'll get some of the plumbing fixtures, maybe some of the faucets might be made overseas. A lot of that LVT, that kind of stuff is made overseas because of the pollution. It's cheaper to pollute over there than here. So, but and then that 2.5% that I just came up with and made up, right? 3%. The national builders, I think it was D.R. Horton and Lennar said it was about a 3% price increase.
which would be very much in line with the numbers,
Yeah.
so.
And it's a guesstimate, right? So a lot of the drama about these tariffs, not that big a deal to housing. Yeah, it's inflationary, but that's nothing compared to what the cities are putting on for taxes, for permit fees. We're talking $10,000 on a $400,000 house. We'll probably see about 50 grand in building permit fees in my market.
Yeah, ours is a little lower than that, but it's not too far off. So,
Yeah.
you know, if you have that much just to be able to pull permits and connect sewer, connect, electrical, it's you know, it,
Sack and whack.
it's crazy.
Sewer access, water access.
Um, yeah,
Okay.
it's certainly fascinating because I don't, obviously this does in real numbers affect the builder's bottom line, and they're not just going to eat that. They're most likely going to pass that on to the consumers. But I think at the same time, there's also enough builders who are trying to go and sell inventory. And so they're willing to buy down rate, they're willing to buy down closing costs, purchase price. So, I wonder how much of this is actually, contributing one way or the other to their bottom line versus getting pushed onto the consumer.
Yeah, you're right. They're probably going to have to eat that at first. But they got to keep those numbers going. The nationals, right? The Lennars, the DR Hortons, and, K Hovnanians,
Mhm.
they're going to end up eating that margin because they got to keep production going to keep the investors happy.
Yeah. It,
My market used to be all small builders, right? And that's what I started out with, right? We would build several homes a year. And then all the nationals came into our market and wiped out all the little builders.
Mhm.
So the little builders, they're not going to be able to eat that. They're just going to stop producing and then they're just going to sell pre-sold homes just because they can't do the holding costs with the high rates and pay, the expenses and try to compete with the nationals.
Mhm. Yeah, there's I don't know if they have it in your market, Craig, but they have it's called like a build on your land. That's like the company name. And so it's builders who basically say, hey, if you have the land, we'll come in and build, and here's our, agreed upon upfront price per foot. And
Mhm.
it's a very fascinating model. I feel like it's almost for the builders who probably got washed out from, you know, building large subdivisions or tract homes. They now have to resort to, building, stuff that's already got a buyer attached to it, not something that's spec.
Yeah. The small builders in my market, they can survive if they go outside of the path of development a little bit. We call that leapfrogging. So they can get into the next community out, tap off their public utilities, water and sewer. Well, all the national builders are closer in, all competing with each other. Or they go to the small builder will go to the very high end and build the very luxury house, and then they do very well. But fewer can compete in that market.
Yeah, no, I agree with you. I've seen that with a couple of smaller builders in my market. Like there's a couple of guys that are now building, $1.5 million houses, very luxury in our market,
Yeah.
where they were building 300,000, 400,000. It's like they just kind of made a total jump from like, spec homes to half custom slash fully custom houses.
Yep. You go one or the other. You got to leapfrog out and go, cost effective, or you got to just build that high luxury end.
Exactly.
So, Okay, so the last topic we got is back to the clear cooperation topic. Last week we talked about Zillow banning, shadow banning, or not shadow banning, but if the broker goes public and advertises it publicly without feeding it to Zillow, Zillow will not promote it, will not let it come to their website once it does go onto the MLS. So how do you think Homes.com responded this week?
Yeah, well, it was interesting when you sent me the little snippet from them, but yeah, just seeing how they're now willing to go boost, some of these listings to help promote some of it. I feel like they're almost looking at it to say, hey, if Zillow's not going to, promote it, we're going to come in and try to take market share ourselves with it. So it's
Yeah.
it's not.
So those two guys they're gonna fight it out.
Yeah, and then we're gonna sit back and see where the cookie crumbles and attack from there. But it certainly has been interesting point of conversation with people who are for sale by owner. Both in markets, where I am that I can help list and sell their property, also markets that I'm looking in, out of my state for investment properties. Like how are these people going to market and advertise their property? And at what point is it going to be, hey, I'm spending $500 a month to advertise my own house for sale, whereas I could, hire an agent to do that for me to a
For
degree.
free, and if they don't perform, I don't pay them at all.
Right. Yeah. So I don't know. It's going to be interesting.
Do you know if Homes.com offers for sale by owners?
I honestly do not know. I wouldn't be surprised if they do, or if they're going to roll that out pretty soon. Um, I have not actually signed up with Homes.com ever. There's a agent in my market who did it, and she said that she spent, I don't know how many thousands of dollars, 5, 10, 15 grand over the course of, 6 months. And I think she got like one or two leads from them, and neither of them panned out. And,
Mhm.
obviously we can't take one person's experience as, how the whole system's going to be, but
I've
um,
heard that was Zillow too, and I don't advertise on either.
yeah,
So,
yeah, I don't either. So, but I think it will be interesting because I like to typically call for sale by owners, just to
okay.
engage in conversation and,
How has that been recently? What's been your response lately?
yeah. I think the biggest thing is just, some people are like, hey, we still just want to continue to try to market it ourselves. We're somewhat in like, I don't know what the term is, but it's almost like you have a consumer that's like half informed. So like they know half or the majority of,
Mhm.
news from the lawsuit, clear cooperation, some of these things that are going on, but yet they still want to sell it themselves. So
And some of them can. I mean, yeah, there's a time you need an agent. There's a time you don't need an agent. Not everyone needs to list.
right. No, you're exactly right. But I think there are other alternatives if you really want to get the most exposure. There's
Yep.
a flat fee listing brokerage in um, our state. It's like one guy, he's down in Charleston. You pay him, I think it's like $500, and he puts it on MLS, and you never hear from him again. And then
Mhm.
MLS says, "Hey, here's the seller's phone number. Call them to set up appointments and to submit offers." And it's like, well, agents see that. Obviously the sellers getting their house marketed, but agents are like, I have to go work two sides for the price of one. So
Yeah, but I mean, it's not like agents boycott it, right?
no,
Some might joke they will, right, to a seller, but the reality is if your client wants to see it, you're going to show it.
no, absolutely.
That's just, yeah.
Absolutely. And I think if you're a good agent, you're hopefully getting compensated from your buyers to begin with. You're not having to rely on somebody for sale by owner who now you're haggling over, a 1.5 to 2% commission, versus, you know, if you just know how to negotiate well and provide value for your clients up front.
Yeah. Yeah, the market's still adjusting to that. Everyone's still sticking with the kind of that market rate of that, whatever, 2.5 to 3%, 2.7, where, somewhere in that kind of range. It doesn't really make sense to go below 2.5, but I still believe we're going to see agents start to collect 3.5, 4%. I do think that the buyer's agent provides more value to the transaction. And once this market is shifted, and we'll probably see it in the southern markets, like Austin, all those Florida markets we talked about. You come in and you got the buyer and you got all these desperate sellers. Your buyer's agent, you're going to pay 6% commission. Take it out of your seller side.
Yeah.
Sorry. I've got the only buyer in the county,
Yeah.
you know. So the seller gave up their opportunity to negotiate the commission on that transaction.
Mm-hmm.
Now, when it's a buyer's or a seller's market, then the role's reversed, and everyone thinks that it's always a seller's market. No.
Well, builders do the same thing. I can't remember who the builder is that does this, one of the bigger national ones, but they pay agents like a 0.5% during the good times, and then during
Lennar.
when they need the business, oh hey, 4.5% plus a $5,000 bonus. It's like,
I'm
well,
your best buddy. Remember me?
yeah, but builders are certainly a different class, than dealing with just somebody who's for sale by owner, or
Yeah.
working with an agent, a buyer's agent, and now the buyer's agent's asking for 4, 5, 6%. But I could certainly see that there's a couple agents in my market who will charge on the listing side 4.5%. And they've been doing it for years. I mean, like 10 years, and great reputation, really good agents. So I just think it's kind of fascinating, and I've had conversations with them about it. I don't necessarily disagree with the practice. I just think it's kind of funny that some sellers are willing to pay an extra 1.5% on the listing side. But
Well, if let's say they have like they're spending thousands of dollars every month on magazine ads, right? Uh, TV spots, whatever they're doing, and the seller wants that exposure, it might be worth the value.
absolutely, yeah, it certainly might. I'm not doing all those
Me
advertisements that
neither.
bigger teams are, but to each their own.
I
So
have an opinion on it. All that advertising is promoting the agent, not the house.
I mean, typically it's the face and name and phone number that's on it. It's not like, hey, I'm gonna go put your 123 Main Street on my billboard. It's like, no, it's the agent's face.
Yeah,
So,
well, pre-internet, we used to have a real estate book. It was a publication, and you'd spend hundreds of dollars per ad, and the sellers all wanted to see that ad in there.
mhm.
It's like doesn't sell the house. It might get you more leads, but you got to do it.
Makes them
Yeah,
feel, you know,
yeah. So, hey,
what
you got any other topics you want to cover?
I don't, but I was just going to ask you, going back to the, homes.com now, boosting some of the for sale by owners that Zillow's leaving behind. What do you think of that? Like, do you think that will be a benefit, help agents, hurt agents? Like, how do you think that'll impact your market?
Let's say you're in business, right? And let's boil Zillow and Homes.com and whatever real estate aggregator you want to talk about. Um, Homes.com, Realtor.com is an aggregator. Zillow. Who are agents going to get more friendly with? The company that goes out of their way to work with the agent or punishes the agent for not doing what they want? I think the better strategy is what Homes.com is doing is they're being very agent friendly.
Mhm.
They're making sure the leads go to the agent. They're charged to promote us, right? Support us. We're going to support you. Let's build that symbiotic relationship where Zillow.com just wants the data and then we'll sell you the leads back.
Right.
Long term, I think Homes.com will win unless Zillow pivots.
Yeah, I agree. I think Zillow to an extent might feel like, hey, we're kind of the alpha in the space. Nobody can, knock us off the horse. So, it doesn't matter how we treat other, competitors, other partners in the space. So I could
Kind of
certainly,
like AOL and MySpace back in the day.
yeah, yeah. And I think Homes.com has enough backing behind it because I believe they're owned by CoStar. So, it's
Yes, they are. Yep.
CoStar Group owns them, and all the, I mean, the amount of ads I've seen for Homes.com is crazy. So, so much advertisement, that they've done over the last 6 months. I mean, they even had I think it was maybe a full 30-second Super Bowl ad. It might have been two ads. I can't remember.
Yeah, don't count them out. I think they're going to come out strong. And then Realtor.com, they're not owned by the National Association of Realtors. We sold the licensing to that to Move.Inc.
Yeah, kind of crazy. I've never signed up for Realtor.com like leads or anything.
Mhm.
I randomly got a lead emailed to me yesterday, and I tried to call the guy, and I couldn't get a hold of him, and we played phone tag, and his voicemail wasn't set up, and he never left me a voicemail. So I still never know if that was a real lead, a real person. But
Yeah.
message certainly seemed real. So if it was fake, kudos to Realtor.com for their AI chatbots, because they're, they're
God, you never know nowadays.
I know.
Yeah. Have you run into a lot of scams in your market? Speaking of that, we'll switch to another topic here.
There's a lot of scams, some in my market for like land listings.
Yep, that's exactly what I'm talking about.
A fair amount of
Hey, I got this parcel of land I gotta sell. I'm out of state. Can you go ahead and list it? And yeah.
Yeah. So I just put a house on the market in Anderson. And it had a lot of red flags to begin with. I still think there might be some red flags, but we'll see later. But I got a call, or actually it wasn't a call. I was in a group with a real estate agent um, on Facebook. And this is not like a real estate agent referral group, it's just like an investor group. And he said, "Hey, who's an agent in Anderson? I need somebody to help list a property for a client." So anyway, this agent's down in Florida. The clients are local with them, and so anyway, a lot of red flags there. But I think we're moving in a good direction. I mean, it's listed, had some conversations, all proper paperwork's there, but it's just very hard to be able to vet things nowadays,
Have
especially.
you met with them in person?
I didn't. I didn't.
Okay.
So that's why it's still a little, but I did meet a son-in-law or a cousin or something in person. So there
Okay.
was, and that's the person I picked up the keys from, and his story matched the rest of the stories. So, uh,
Yeah. Yeah, this is a new one that we have to figure out how to navigate. And I'm not quite sure how you do it. But there was a transaction made on a house that got transferred and it wasn't the real seller. It wasn't the real owner.
really,
Yep. But the agent never met him face to face. And then the title company dealt with this person, whatever, and they did everything online, all the transaction, and boom, boom, wired the funds. Title got transferred, and then the owner, was talking to a friend or something and said, I didn't know you sold this house or, your property on Main Street. He goes, I didn't. And that's how they discovered it. So this fraud is going across the country and they're duping that they're the seller. The agent never meets them in person because we're such an old school business, belly to belly, meet someone, and then we introduce this new technology. We're not sure how to vet people online anymore. And then people are scamming. So
yeah, it's so fascinating. At least in my case, so the property is kind of a weird story. So I'm selling it for the parents, older couple. Their daughter and son-in-law bought the property, borrowed some money from parents, you know, renovated the house, and then they were going to go sell it. So I talked with the former agent who listed it for them. They didn't sell it; they listed it too high. Talked with the former agent, um, and it came off the market. The parents ended up taking the house back by basically buying it for whatever dollars they had into it. And then I talked with the attorney who closed the deal between the kids back to the parents. So it's like that would be a pretty big scam if you could do two different law firms, multiple people. But no, it's certainly really disturbing. I don't know if you heard Brandon Turner, or I'm sorry, not Brandon Turner, David Green. He talked
yes.
podcast, or maybe
Holy cow.
like 40 properties that he lost because somebody transferred title on 40 properties.
Yeah.
It's insane.
Yeah, and you can set up, and you could probably do it yourself, but there's programs you can set up and pay for to monitor your title. But that just lets you know the title is transferred out of your name. It doesn't prevent it.
You can still have to go fight to get it back.
Yes.
One thing that I think could be helpful for investors or agents as well. You may be familiar with this, Craig, but if you hold property in a trust, you have to go get all this additional paperwork signed and turned back into the attorney or the title company. So if you hold property in a trust, it's very hard for somebody to go, uh, scam you out of that. Not impossible, but you have to do a couple certification of trust paperwork. You have to verify the trustee. So like, there's a lot of stuff that goes, and sometimes even the attorney's office will still want to see the full copy of the trust paperwork in order to actually sell it. I had that happen one time. I owned a house that I bought sub two, and the attorney's office wanted to go see the full trust paperwork, which I didn't care. I was selling it at that point, but I shared it.
I wasn't aware of that. Okay, so I just typed into Perplexity, does holding a property in a trust require more paperwork to sell it and transfer title? And they're saying yes, it does require that. Trust documentation, certificate of trust, and then signee as a trustee, tax ID. Yeah, it would be harder to scam, wouldn't it?
There's a couple ways to get around tax IDs because I don't have tax IDs set up for my trust because they're revocable or
Yep.
in trust. So I don't. It might be possible with the IRS to get a EIN, but it's most people wouldn't because you can change the trust and cancel it at any time. It's not like a LLC where you're going to set it up and you have to go through a formal process to get rid of it. But
Sure.
that could be a benefit if people are concerned about holding title to something and then it getting transferred. It's like you're going to have to be pretty elaborate in your scam to be able to transfer property out of a trust that you don't have paperwork for initially.
Yeah. Title companies are on alert now, you know, 'cause I think it's going to get harder and harder, but then the scammers are going to get more and more sophisticated.
Mhm.
Crazy world.
A lot of crazy stuff we got to deal with, Greg.
Yep. And they keep cutting our commissions.
Unfortunately, but keep fighting back.
That's right. I mean, if you think about it, what do you pay a server to bring your food? Or like I was at Jimmy John's and they whatever, put a tip in 15% or more.
Mhm.
Like, huh, I'm just asking for 5 or 6%.
Well,
Jeez. I'm
you
not even asking for that. Half of that goes to pay the other agent.
it's crazy even just to see these companies asking for tips on a takeout order. I'm like,
Yeah,
that's the definition of not paying a tip.
right. If I'm standing to order my food, I'm not tipping.
Well, it's like I've got to go drive to a place, pick it up. It's like, I'm basically tipping the guy in the back to cook the food, which, in some circumstances maybe that's appropriate, but
Yeah.
for a Starbucks drink, I don't know.
I've been doing it because I think these fast food workers are probably the most underappreciated workforce in this country. They
Yeah.
work a hard job. They make very little pay. So I'm okay with tipping the fast food workers. And I'm a bill of health, right? I live off of fast food because I'm always on the go. If it weren't for them, I couldn't do my job because I'm always eating a fast food because of work.
Mhm. I hear you. I especially like being able to tip like local places, local fat, like we got a local fast food place, local coffee shops. Um, Sometimes it is a little hard for me to swallow. you know,
Yes,
it's like a large, corporation that's like, hey, we're not paying our employees well, and we want you to tip.
right. You want $15 for this crap food? You're not paying your employee enough? Oh man. But no, I just the only thing that gets me is I look at the tip and then I think about our commissions going, why is anyone complaining?
I know. It's funny. I used to think that our commissions were inflation resistant, that like my income would always rise over time because the price of homes are just going to keep going up. But now it's like, well,
Oh,
not necessarily the case. I might make less than I made 4 years ago on a deal.
absolutely. And it's not like every year you're guaranteed a certain amount of sales. And we talked about this when we started. Every day we start over.
Mhm.
Closed one. Okay, now what?
Yeah.
Where's my next bill gonna, how's my next bill gonna get paid?
I know. One of my houses I just got under contract. I'm like, okay, that's great. And then I woke up the next day, I was like, great, what's next? Like, something else has got to be in the pipeline.
Yep. Yeah. So it's not an easy business, but I can't hold a real job. So
I hear you.
awesome. Well, oh, we got some in the chat box here.
That was just me. I had shared one of the articles because we had a couple people in the room, so I shared a couple articles on it.
Oh, okay. Got it.
What I'll try to do, especially if we have people in the room, is I'll try to just post the articles that we're referencing for
Okay.
highlights, so that way people can look at it and take a look. So,
All right. Onward and upward. Till